on the space of external affairs, and we are going to be talking about the issue of how India needs to shed the West's China plus tag and emerge stronger. Hemming this session, moderating this session, chairing this session is Mr. Shyam Saran. Please put your hands together and welcome him on stage. He is the former Foreign Secretary, Government of India, and in the year 2011, he was honored with the Padma Bhushan. Sir, good morning and a very, very warm welcome to you. Please put your hands together, ladies and gentlemen, and welcome esteemed moderator on the dais. I'd also like to welcome on stage the esteemed panelists of this session, Shivshankar Menon. A very, very warm welcome to you. Former National Security Advisor, Government of India. He's also previously served as the Ambassador to China and Israel. Warm welcome to you, sir. Thank you for taking the time out and joining us here. I'd also like to welcome on stage Mr. Nalin Surie, former Indian High Commissioner to the UK Government of India. He served over a long and distinguished career in the Indian Foreign Service from 1973 to 2011, and has also served as ambassador to China and Poland. Ladies and gentlemen, that is your panel there, and here begins your session.
Good morning to all of you. We are very privileged, the three of us, all Foreign Service colleagues, to have this opportunity of interacting with you on this very special occasion of the 50th anniversary of Business Standard. We have been asked to speak about, in the context of India becoming a developed nation by 2047, what could be the role of what has been described as China plus one? Whether in the next several years, we are really going to see the emergence of India as an industrial power, as an economic power in the same league as China, and perhaps even beyond. You know, that is the ambition that we have put forward before ourselves. So before going into this subject in some more detail with my colleagues, what is China plus? What is China plus one? Now, China plus one is a concept which, you know, in fact, came up briefly as early as 2008, when there was the SARS epidemic in China, and there were similar supply disruptions as we see, of course, on a much smaller scale, because China was not such a large economy at that time. So there were already voices saying that there is need for diversification in terms of the supply chains which were just being established at that time. Then the next time that we heard this term, perhaps with greater currency, was sometime around 2013, 2014, where people started talking about, you know, the fact that in many categories there was over-dependence on supplies from China. And again, the issue of, you know, how do we diversify away from China. What is very important is that, you know, of course, this whole thing got further accelerated by the trade war, China-US trade war around 2017, which is still continuing. Secondly, the disruption, very major disruptions caused by the COVID-19 pandemic. And then, of course, further accelerated by the conflict in Ukraine, and now, of course, the conflict in West Asia. So there has been a number of these kind of disruptions in global trade and investment flows, where China, over a period of time, has become an integral component and perhaps the nodal point of many global supply chains. Dependence on China in certain categories of sensitive goods has increased dramatically over the years. And this is what has led to this demand for diversification away from China, certainly in some of the specific sensitive goods, as I mentioned, medical equipment, for example, after the COVID-19 pandemic. What is perhaps important to note is that even when we are talking about this diversification, sometimes the discourse in India is somehow that industries, foreign industries, are actually uprooting themselves from China and going and establishing themselves in other countries, and that India is very well placed to be able to welcome those industries. That is really very far from the truth. Nobody is really moving away from China, except in a small way. What is happening is that major multinationals who are have invested very heavily in China are in fact putting fresh investment, new investment, not in China so much as they are in other alternative destinations. So this is important to understand that what we are talking about is essentially incremental investment flows that are taking place, and some of those are being diverted away from China to other destinations. The reasons are multiple. It is not only geopolitical, but we'll come to geopolitics. It is also because over a period of time, wages have been going up in China. And therefore, the kind of competitiveness that it had in labor-intensive goods, that competitiveness has declined. And therefore, other locations which have that labor cost advantage are benefiting from this. This is something which is important. By the way, those shifts are not only by multinationals, but in fact, Chinese companies themselves are shifting from China to other locations. Vietnam, for example, is a prime example. Second point that I would like to make is that even if there is incremental investment or that there are trade barriers being put up by major markets in the US or in Europe or in Japan, other countries, what the Chinese response has been is to actually set up units, production units, in countries which do not have a problem in accessing the US market or the European market. Who are the countries which have benefited? Vietnam, number one. Mexico is now perhaps the favored destination for Chinese investment for vehicles, for example, electronic goods. And also, I think we have to perhaps understand that the only area where perhaps there has been a big impact is in high-tech products. That is where, in fact, the focus has been. But otherwise, the kind of very, very deep economic and trade engagement that exists, for example, between the US and China, which is $630 billion still today. This has, it's very difficult to see how this is going to change in the near future. But I think before we get into this, this particular subject in more detail, let me ask my colleague, Shivshankar Menon, who's perhaps one of the best observers of China and Chinese politics and Chinese economy. In terms of what's happening in China itself, when we are talking about, we are looking at from outside in. From China, if you're looking out, especially over the last few years. I mean, we have been talking about, pulling away from China, but there is also, according to some people, pushing away that China is doing with regard to its engagement with the rest of the world. How do you see this politics in China, evolving, and what is the impact it is having in terms of this economic engagement with the rest of the world?
Well, from a Chinese point of view, when they look at the rest of the world, over the last few years, they've steadily seen a deterioration in the way the world deals with it. They see the world as less and less of an opportunity. And the reason Xi Jinping himself said in 2012 is the more we rise, the more opposition we must expect. So his answer to that was simple, something called a dual circulation economy, which is the internal circulation, which means build up your own domestic economic capacity, various ways, shift towards domestic consumption, etc. But external circulation to create other people's dependence on your economy so that there is a limit to what they can do. And in some ways, it has worked. Because if you look at it, people were talking about decoupling. Nobody talks of decoupling anymore, either in the US or in Europe. They talk of de-risking. Where are they de-risking? They're only de-risking in a few sectors which they think are strategic, where they have control. High tech, for instance, semiconductors, you know where they are doing this. Everywhere else, China-US trade is booming. China's trade with the EU is booming. And frankly, the world economy needs China even more today than it did 3 years ago. China today accounts for something like almost 40% of the growth in the world economy. I mean, that's a huge amount. So when we talk of China plus one, frankly, what they're looking at is additionality. I have a problem with China plus one as an Indian. Why am I just the object of other people's policy? Why should I be subject, my economic future be subject to somebody else's decision that today I don't trust China, tomorrow he trusts China again, that's the end of plus one. That's no basis for me to develop India into a developed country. I lose agency in this. In any case, even if you trust in China plus one, which frankly I don't, because they will follow their own interests, you then have to make sure that you are equally or more attractive than Thailand, Vietnam, Bangladesh, Mexico. They are part of these large trading arrangements, whether it's USMCA, they have access to the US market, or whether they're part of RCEP, they're part of global supply chains in ways that we are not today. On labor productivity, which in any case, labor is a much smaller proportion of final cost today, you all know. On various criteria, ease of business, etc., you need to be able to match and beat them. That's not where. You have other advantages. Play to your own advantages. Yeah. I don't see why we're doing this based on what other people are doing with China. For me, that's a very weak read to base Indian strategy on.
Okay. Very weak basis to base Indian strategy on. Nalin, taking this argument a little forward, when Ajay Banga, who's the new World Bank president, when he came to visit India a short while ago, he said, and I quote, "I think India's opportunity currently is to cash in on the China plus one opportunity to attract investment, and that this opportunity will stay only open for the next 10 years. Obviously what Shankar is saying is not something that, somebody like Ajay Banga believes. And by the way, there was also a article, I think one of the authors was the current economic advisor. This was an article which says, "China plus one, will the dragon now make way for the elephant?" That was the title of the article, in which Mr. Ananta Nageshwaran and two of his colleagues from the Ministry of Finance, I think, said that, yes, this is in fact our great opportunity to take advantage of this shift. And he also said that while doing this, we should double down on our advantage of a large domestic market, macroeconomic stability, and policy consistency. What is your view?
Thank you, Shyam, and thank you, Business Standard, for inviting me today. The dragon is a mythical animal. The elephant is the real one. I think there's a fundamental difference. I agree with Shankar. I think I would respectfully disagree with what Mr. Banga has said. He is the World Bank president. He looks at things in a particular way. But I think you had alluded, and I think Shankar put it very bluntly, I don't think India is China plus. I think India is sui generis. So is China, for that matter. I think the countries which are part of that plus tag, as you spelled out, are those which are on the same economic track as China essentially is. They have large export-driven economies. I think that's a fundamental difference. Now, we are looking ahead. We're looking at 2047 for India, 2049 for China. I think going forward, our economic paths are going to be parallel, but similar. There are likely to be areas where they will intersect at several points, which is happening even today, in spite of the very difficult bilateral relationship. So I think we cannot look upon ourselves as a China plus tag situation. We have, I think, an independent approach that we must follow. We have a lot of our own intrinsic strengths economically, which have been demonstrated over the last, particularly in this century. I think we can build upon those. So I would say that we have to develop our systems in such a way that the dependencies we have created on China are reduced. Now the interesting thing is, in the last, ever since Galwan happened, you would have imagined that our dependencies, you would have imagined that the dependencies have come down. Actually, they have not. If you look at the last year's trade figures, our imports are close to $98 billion from China. Yeah. And of this, there are 26 categories or 28 categories, which account for 90 billion of that import. And within that, you have two sectors, electrical equipment and power equipment, which account for 50% of your imports. The point is, why did you allow this dependency to be created in the first instance? Can you reduce this dependency, and what are you doing about it? I think this is something where both the industry and government went wrong, and I think in some ways bottom lines prevailed. So I think we need to be on our own independent track. I think we have our own policies which will make us hopefully a developed country by 2047. And China is well on the way to, I think, meeting its objectives, at least part objectives, going on to 2049. So I think we need to have enough self-confidence in our abilities to manage on our own. We have the advantage of a huge domestic market. I think we are not going to be able to go down the China route beyond a point. Of course, exports will play a very important part, but it will not play the critical part that it has played, for instance, in the first 30 years of China's very explosive growth. So take it from there. I think I would agree with what has been said by both of you, that this China plus tag is not something that I'm at all happy with or comfortable with. And I think it's not deserved either, frankly.
Okay. So we have debunked China, China plus one. We should follow our own path to development to 2047. It need not replicate the trajectory which has been followed by China. I think we should play to our strengths rather than try to imitate what the Chinese trajectory has been. I think that's the sort of message that we are getting. With respect to this dependence that you mentioned on China, and the fact that Nalin also has drawn attention to the fact that despite Galwan, our effort to try and reduce our dependency on China, particularly in some very important categories. Electronic components is certainly one of them. APIs, for example, for our pharmaceutical industry is another. I believe in EVs, magnets which are being used, almost 100% dependence on China. The Indian industry will say, and has in fact been saying, that it is all very well to talk about to reduce our dependency on China. But the fact is that even our exports of several of these items, which have been success stories, are in fact dependent upon our ability to access cheaper, intermediates and components from China. And if a change has to come about, it has to come about only over a period of time. It cannot be done overnight. One may argue that, for example, something like the PLI scheme is precisely in order to, over a period of time, develop those kind of domestic capabilities. But given the figures that you yourself mentioned about the heavy dependence of not just India, the dilemma that India faces is actually replicated almost everywhere around the world. If we are really looking at that kind of a landscape, what do you think over a period of time, this de-risking strategy rather than a decoupling strategy, this de-risking strategy, to me, it seems, is actually a admission of failure to actually move away from the kind of a structure of the global economy which has developed over the last 30, 40 years. Most countries are finding that it is not at all easy to get away from that. And what is very interesting also is that I follow, the surveys that people do, on, newspapers like FT do, for example, on the business sentiment amongst those American companies or European companies, Japanese companies, which are already located in China. Year after year, you find those surveys are saying that those companies are saying they have no intention of moving away from China. And in fact, a fairly large number of them are even talking about expanding their investment in China for the same reason that we are saying that, one of the greatest assets that we have is our domestic market. Well, the domestic market in China is perhaps several times the size of the Indian market. So even if we are looking at how we can, make ourselves a more attractive destination, on at least that one count of the largeness of the domestic market, we still, in fact, are far behind. What is the answer to this?
Well, just to support what you said, in 2006, Chinese value add in Indian exports was around 6%. But by 2019, just before COVID, it was all the way up to almost 28%. Chinese are, and in some sectors, like pharma and so on, it's much higher because the APIs all come out of China. So this is not something that you can suddenly decouple from, find alternatives. There aren't international alternatives, as we saw, especially in pharma during the COVID pandemic. So for me, the choice is not between import substitution or complete dependence on China. You should follow a China plus strategy in your imports. You have to start developing redundancy, finding other sources for these critical goods which you today import from China. And the fact is that Chinese imports actually keep prices down in India, help us to deal with inflation, and help us to export, make our exports competitive. So we need to start looking for alternatives. So for me, it's not, you can't get off the globalization bus very easily. We talk very easily of deglobalization. Actually, since 2011, if you look at the proportion of global trade to global GDP, it's roughly between 55–60%, steady. It hasn't gone down. So anybody who tells you the world is deglobalizing, it's just the patterns of trade are shifting. And that's where we need to stay engaged. And so for me, it's a de-risking or China plus one strategy for ourselves that we need to look at if we want to cut our dependency. And this can be done. Maybe not so quickly in pharma, but there are other sectors. In automobiles and so on, there are other sources. It requires working very closely with Southeast Asia. Yeah, I know you just heard we don't want to get into RCEP. If you don't want to get into RCEP, get into CPTPP. China's not there. But there are other ways of dealing with the world. But it seems to me you need a cleverer strategy than just saying, I'll do it all myself, or that I won't deal with the Chinese. You can't do that today.
Okay. So I've been told that I have to wind up in another 5 minutes, right? 10 minutes, okay. Yeah, so I'll just finish with Nalin, and then we'll have a question and answer session. Nalin, what I would like to ask you to perhaps examine this proposition. Right now, the relations between India and China are tense, are sharply adversarial. But there was a time, not very long ago, where we had, in fact, a kind of a consensus at the leadership level, which said that, there is enough space in Asia and the world for both an ascendant India as well as an ascendant China, which also said that India is a great economic opportunity for China, and China could be a great economic opportunity for India. That there was a certain complementarity between their economies, which could be exploited for the benefit of both countries. We are the two largest emerging economies in the world. And there are, I think, one could argue that there are many things that we can do together. Do you foresee that perhaps something of that kind is a realistic possibility? Quick answer.
Quick answer, yeah. I mean, look, the fact is we had principles for the development of bilateral relations entered into at the highest level. The fact is that there has been a betrayal of trust. The fact is there has been a violation of solemn agreements, as the Chinese would say. So I think some price has got to be paid for that. The attitude of China, the way I see it now, is they're trying to stare you down. They're trying to put you in a corner in whatever way they can. Now, why this is the case is open for speculation. They would like to suggest that India is really not a challenge in any way. But I think because they believe that does not mean that that is the case. I personally believe that for China, the biggest challenge is India, starting with Asia and going forward. Oh, sorry. Okay. I'm not used to doing this too often. So I think the point is something has to give. Today the situation is, I would say, a very grave stage of disequilibrium. Dangers lurk, and these are serious dangers and cannot be taken lightly. I think the Chinese have to get off their high horse. Yeah. Until that happens, I think we are going to be in a stalemated situation.
Okay, so not for the foreseeable future, unfortunately. Yeah. So we have 5 minutes now for question and answers. So what I will do is I will take 3 or 4 questions together, and then I will ask my 2 panelists to respond to whichever one they want to. So you raise your hand, please identify yourself. You're the lady, yes?
Hi, my name is Bhavna, and I work as a public affairs consultant. So my question is, because this is a media event, and it's rooted in popular culture and what's happening in the world around us. So of late, I have started seeing K-soaps, K-dramas, and the latest being the 3-body problem on Netflix trending in a big way. So there is also a cultural aspect which we are not playing to our strengths on. I unfortunately believe that.
Not even Bollywood?
We are not playing to it in the sense we are not projecting it out there as owning it in a bigger way, putting it out there in a more aggressive fashion.
Yeah. Okay,
just a
so
thought, yeah.
what do we need to do to leverage our cultural? Any other question, please? Yes, please.
Good morning, everyone. I'm Durgesh Jha. I'm a student researcher from the field of international relations and foreign policy. So, sir, because we are talking about, of course, the perceived image of India in the eyes of the West, then probably one of the cases from history that comes into mind is the dehyphenation of the India-Pakistan relationship in the eyes of the US, let's say. So, sir, just wanted to know, how would you contrast that with the China plus tag, which is right now being associated with India? Because obviously these two situations are quite different, because here the entire idea of economic ties between, the matrix between India, China and US in the terms of the economic and bilateral ties is much more complicated.
Okay. So no decoupling, dehyphenization, perhaps that is something that we may be looking at. On this side, please, any questions this side? Yes, please.
Hi, myself Manish Chandra. I think we also need to look at the role of China in India's SME sector. And the sector has gone on itself to really seek the latest technology, efficient technology, cheap technology. I go to Morbi and all the machinery is from China. You go to Washi market, all the home products are from China. And also for industry like, corrugated boxes, all machinery is from China. So the industry is well ingrained here, and probably we don't have an option. And it is not the state which is running it. It is the entrepreneurs who have gone on to really get this. So we need to find an answer to that as well.
Okay, one more. Anyone? Yes, please.
So I'm a farmer. I live on the border with Pakistan. So I don't want to deviate to Pakistan. I can't miss this opportunity. You know, considering that the Sharif family is in power in Pakistan and they are the only ones who ever said that we want better relations with India, and that also in their last elections when they won. Do you think there's a chance of India-Pakistan trade opening up, especially through both the Punjabs?
Okay, okay. So, Shankar, any of these questions? One is the culture question. There is also the de-Hafinization question.
On the Pakistan question, yes, I think there's a good chance because Zardari is the only other one who said that he would actually open up MFN trade. And he's now going to be president and as you said, the Sharifs are in power. Trouble is that their own domestic economic condition doesn't give them very much freedom. And there are huge business lobbies, quite apart from the army, business lobbies against the idea of opening up trade with India. So if they can handle their domestic situation, yes, there's a chance. I mean, that would be my answer. But I'm not 100% sure that they can. I mean, that seems difficult. On the culture thing, by the way, the Chinese are very negative about the Netflix version of Three-Body Problem in their own internal media. They have their own version which they'd made, which they'd cleaned up, made China seem much less dystopian in the future, and so on. Frankly, if the state pushes culture, nobody accepts it. Why is K-pop popular, but not Cantonese pop, which is actually as good or bad? Because Koreans are harmless, they're non-threatening, right? The state is not pushing it at you. And it's an easy form of entertainment, the soaps and so on. So I don't think the state getting involved is the answer if you want to spread. Frankly, Bollywood, Indian music, especially in the last 10 years, managed to spread tremendously in China, but on its own. I mean, Lagan made a lot of money, probably made more money in China than it did in India, I don't know. So for me, the way to do this is let the normal laws of gravity, physics, whatever, economics work, but keep producing good stuff. And that non-threatening image is very important. Of course, just that is not enough. I mean, Japanese culture has not spread. It's respected but not spread. But Korean culture, somehow they managed to touch into something. And I think it's worth studying the K-pop experience.
Okay. 1 minute, Nalin, and with this respect to the very important point made, that as far as, you know, entrepreneurs, Indian entrepreneurs in the small and medium, you know, sector are concerned, they are actually already quite well integrated with China and Chinese suppliers, and it is going to be very difficult to get away from that. So how do we come to that?
I think I addressed that in my remarks earlier. You know, the dependencies have been created by Indian industry, and Indian industry has to find ways to reducing those dependencies, irrespective of whether our relations improve or not. So I think you have to become self-sufficient, and I don't mean self-sufficient in terms of a closed economy. You have to start looking at other sources for this kind of equipment. And I know of several instances of people in the SME sector who actually had most of their equipment from China, including a lot of raw materials, but have in the last 5-6 years begun to move away from that, because they found certain disabilities in dealing with China beyond a point. It was not so easy to deal with them in financial terms, for instance. But I think it is for Indian industry to reduce its dependencies. It's not good to be dependent on one market, irrespective of the state of your political relations.
Okay. So it is Indian industry which has to step up to the plate. I think we have now come... De-Hyphenization? Quickly?
Yeah. Look, I think we don't have the time, but I would ask you all to read the DHL's latest International Connectedness Report of 2024, which will actually highlight very clearly to you that this so-called de-hyphenization, de-risking, etc. is happening only in a very limited fashion, and that the main place where the decoupling has taken place is for the United States, between the United States and China. But bilateral flows between the US and China are still higher than any other bilateral set of flows. The other point which this report brings very clearly is that the only place where decoupling has taken place is in North America.
Okay, so dehyphenization is not really taking place. I mean, that's the bottom line. So thank you very much. You have been a very attentive audience, and I hope you have enjoyed our conversation today. And once again, congratulations to Business Standard on its 50th anniversary, and I hope you'll have a much more stimulating conversations to follow. Thank you.
Thank you to the honorable moderator, and thank you, esteemed panelists. Please do come together for a group photograph. Ladies and gentlemen, please remain in your seats. We are heading straight into the next session that puts the spotlight on the areas of energy and sustainability. We will just take a few seconds to set up stage for the next session. Stay in your seats, please. Thank you. Thank you very much for your time and your participation at Business Standard Manthan.